Here we go again. Welcome back. In the previous video I went through the basics of Japanese candlesticks. Highs, lows, open, close, body, wicks. Now you know the basics. I can move on to candlestick setups. So these candlesticks can form certain patterns that can help you know that price is going to change direction or continue its current direction. They are great. So this is the start of price action setups or Japanese candlestick setups or candlestick patterns, and we're going to look at engulfing candles to start off with. So engulfing candles are just one of these candlestick setups, price action setups. This video will make more sense as it goes on. So a quick summary: open, close, high, low. That's what a Japanese candlestick shows. The open close forms the body, the high and low the wicks. If this is all new to you, go back and watch the previous video, or even better, start from the beginning of this series. Candlestick setups, price action setups, Japanese candlestick patterns. They can be called lots of different things. They can show market reversal. So they form a certain pattern and it can signal a potential market reversal. If price is coming up, it could signal that price is about to come down, or vice versa. They can show market continuation. So if price is coming up and you see a specific candlestick setup, a certain pattern, that can signal that price is going to continue moving up, that the euro US dollar is going to continue its appreciation. Or if price is coming down and we get a setup, that could signal that pound US dollar is going to continue to depreciate. So market continuation, price is going to continue moving in the same direction, or market reversal, it's going to change direction. These patterns, these setups are formed by single candles or multiple candles, and it's a pattern formed by the high, the low, the open, or the close, or a combination of those things. Engulfing candles. I'm pretty sure there's meant to be a picture there, but it's not showing. Excuse the blank square here. Engulfing candles. Engulfing candles are a double candle setup that use the candlestick bodies only. We're not interested in the candle wicks, just the bodies, the open and the close. And they're a double candle setup, meaning you need two candles in order to form the engulfing candle setup. There can be bullish engulfing candles, meaning price is going to become bullish or continue being bullish, and there are bearish engulfing candles, signaling that price could become bearish, could come down, or continue to be bearish. That market continuation or market reversal, they can be used for either or. So bullish engulfing candles signal that price could move up. Bearish engulfing candles signal that prices could come down, that a certain currency pair could depreciate or appreciate if it's bullish engulfing. So let's have a look at this setup, see what it looks like. So it's two bodies, it's a double candle setup. We need two bodies, and what you need is one body. This is a bullish engulfing candle setup. You need one body to engulf the previous candle's body. So if we look at this red candle here, we opened at 74.25, closed down here at 74.20. The next candle opened at 74.20, which is the close of the previous candle. That's quite common. But this candle actually closed all the way up here at 74.30. It engulfs the previous candle. It's bigger than the previous candle. It overshadows the previous candle. If we look at the red body, it fits within the green body easily. This is the candlestick setup. This is the bullish engulfing candle price action setup, Japanese candlestick setup. We have a big bullish candle that's bigger than the previous bearish candle body. So make a note of that. The bullish candle is bigger than the previous bearish candle. This is a bullish engulfing setup, and we'll look at more examples of this. So what is a bearish engulfing setup? Once again, it's going to use bodies only. but it's going to be in reverse. So you're going to have a big bearish candle, big red candle, that's bigger than the previous bullish candle. So we have a small bullish candle followed by a big bearish candle. This is the bearish engulfing setup. So we're only using candle bodies. The big bullish candle has to be after a smaller bearish candle. And for the other setup, the big bearish candle must be bigger than the smaller bullish candle. It's a lot to take in, I know, but you'll love these setups as you get to know them. So here's a price chart. So you can see price is uptrending. We have these higher highs and higher lows. Prices coming up. We're uptrending. So we can see that just by the waves, the steps that price is forming on this chart. This is Euro US dollar. Looking at the bodies, let's not focus on the candle wicks in this video. If we look at the bodies, you'll see that some candles, such as this one, are much bigger than the previous candle. And if we have a look here, we have a bearish engulfing candle setup. So I've marked the body roundabout with these dashed lines. So we closed down here, we opened up here, big red candle. The previous bullish candle was smaller. So we have a bullish candle followed by a big red bearish candle. This is a bearish engulfing candle. It's a double candle setup. There's two candles here, a bullish one and a bearish one, and the bearish one is bigger. So price was coming up, we get the bearish engulfing candle, and price comes down. This is how they signal future price direction. And here we have a bullish engulfing candle. So we have a small bearish candle here, followed by a bigger bullish candle, and price comes up. So we're coming up, bearish engulfing, price comes down. Bullish engulfing, price comes up. They signal market reversal and market continuation too. But I don't really have any examples of that right now. So price comes up, bearish engulfing, big red candle after a smaller green one. Price comes down. Price comes down. Bullish engulfing candle, big green candle after a small red one. Price comes up. Here are a number of engulfing candles that signal the future price direction. So we got a red candle, price comes down. A red candle here. This is only slightly bigger, this one, only slightly. You might not even be able to see that it's bigger. The price comes down. This one's not marked, but we have a bullish engulfing here. Just look at the bodies, not the wicks. This green body is bigger than the smaller red one. Then price comes up. Another one here. So these mark when they work. We could look at continuation engulfing candles like here. So there's a bullish engulfing after this. We have this big green candle after a small red one, and things continue to move up. If we look at price coming down somewhere like here, this red candle is bigger than this smaller green candle, and things continue to come down. This one here, this one here. This one doesn't work, but it's not 100% guaranteed, and you'll soon learn that about these price action setups. You can't just now buy when you see a bullish engulfing candle and sell when you see a bearish engulfing candle. It's not that simple, unfortunately. That is the end. So that is engulfing candles. Bullish engulfing, a big green body, a big bullish body that's bigger than the previous bearish body, and then vice versa for bearish engulfing candles. What's going to happen in this course is you're going to learn all these basics, and we'll start putting them together, and you'll be able to understand the markets and see trading signals and all these things will all make sense. So far we've gone through the basics of price action, you know, what price action is, why you should trade price action, and I've gone through with you Japanese candlesticks, how to read them, how price trends and downtrends and moves sideways, how it ranges, and now you've learned about engulfing candles. There are many, many more price action setups, and I'll just cover a few, the few main, most common, popular candlestick setups. I'll cover them in this course. There's still so much to learn about price action. Once the price action's done, we'll move into technical indicators, and at the end, you will know and have a great foundation of technical analysis. Thank you for watching, and I'll speak to you in the next video.